Welcome, and thank you for clicking on my video. I wanted to turn the camera back on, and I know some of you guys might be bummed out to have to see this ugly mug again, but I felt like seeing you guys today. I felt like it's going to be a good one, and today we are going to get into the bigger time frames, right? We're going to be looking at daily and weekly charts and really just discussing, hey, have we violated anything from like a week ago? Do we still have the same setups? Is a weekly pullback still the most probable, something that we were looking at in the previous week? And then, tomorrow we're going to get into those shorter time frames. We're going to be looking at the 2 hour and the 30-minute chart, two charts that are going to be critical early on next week. Critical charts. So make sure you are subscribed because we're going to give you guys weekly updated expected moves tomorrow. We're going to give you guys some daily expected moves for Monday tomorrow. But for today, I think it's important we get into those bigger time frames to see if anything was violated. So let's discuss it. Let's get into it. I think it's important to say at the beginning of the video what we were paying attention to last week and what we were saying from the macro scale to watch for. Now, if you are following these things correctly, if you are utilizing weekly moves correctly, if you're utilizing shorter timeframes correctly, everything, the info that we put out there, then this week should have been a good week for you, right? We went down to the weekly move. We even put on Patreon the decision making, right? We discussed that on YouTube afterwards, but we did it during market hours, even before the market opened for Patreon members. So they knew and they were reminded like, hey, when this line is tagged, this is a decision-making area. This is where you can turn around. And so hopefully you guys understand that. And maybe you had to learn that the hard way this week. But hey, learning the hard way is good. Making mistakes is good because now you know. But as far as the bigger timeframes go, looking into the future, what is something that we really need to point out here? Hey, what's the most probable thing? What's the next big opportunity? Probably a weekly pullback. A weekly pullback is probably the best opportunity still. Now, that doesn't have to happen right now, but we have a lot of signals that still suggest that that is going to happen right now. If we really zoom out on this, you see multiple chances here, multiple times where when volatility did come in, you actually see it right here. So I really like this this March of 2024 kind of downturn, this April into March, because it really shows you how the market can do this. It can really just keep violating divergence over and over. They leak it out as high as it can go before you get the correction. And I think you're in that time right now. I actually think you're in like a moment like this, and you're about to see a pullback like this, and you can extend the market higher for some time before you go through something bad. I want to be very clear about that. Just because I'm talking about a weekly pullback and maybe some stuff on this video says crash or something like that, is to be aware of those things. It's to show you guys those things, but it's also to talk about people who are obsessive over a stock market crash and don't understand, yes, a big crash is most likely coming, but the signals that we have seen have extended this to where it could go into 2026 or 2027, and I will show you some of that in today's video. But I think we're in this period of time. How many times did this violate? Well, we got one divergence right here, one. So you got one violation. That's 1, 2, little one, 3, and then you go down. What have we seen in the near price action? Well, the divergence on the RSI really just came up right in here. So really, what have we seen? We've seen 1, 2, we haven't even seen a third one. So we can leak this market out higher. But the big deal here is we are holding every divergence point. Last week, we discussed if you want this market to absolutely not see a retracement, what do you need to see? You need to see the daily chart boom. You need to see more of a boom to get rid of the shorter time frame weakness. This is why it's very important you subscribe for tomorrow, because the shorter time frames did not get rid of their weakness. I even had some Patreon members emailing me, which is really exciting. It's very nice to see people seeing what I see. And then they're like, hey, do you see this? I go, yes. And I'm ready for those reversal signals to completely confirm on Monday or Tuesday of next week. So it's going to be a very important time to see that. But on the daily time frame, if you wanted to get rid of those shorter time frame signals, you need to see one big push up to the monthly move. That's my belief here, because that would violate all of those signals. What I'm trying to discuss here with you in this portion of the video is we still have all of the daily weakness to turn down that weekly chart for a weekly pullback, for a weekly little retracement here for the market. Where could that overall go to? And we're going to actually show you something else in a second here, but for the weekly chart, where could that go to? It could go down to the 20 on the weekly. I think this is a great one to look at, and I think this is a great one to look at. So where do you think I'm paying attention to us basing out on a weekly pullback? Just something like this. I don't see any real big reversal signals here. Sure, you have that extended divergence across, but this divergence already played out. This could just be a new cycle move, and you're really positive. So I'm inclined to believe that this is a new cycle move. Still planning on taking some kind of play to the downside, right? That's what I'm talking about early next week. So if it ends up falling through the floor, hey, fall through the floor, son. That'd be great. But mainly, this looks like a pullback. It's in positive territory. So this little box right in here is what I'm really watching. I really like this from about 590 all the way up to about I would say 620. Anywhere in that area, if I start to see reversal signals, that'll be great. But I will have updated like October moves for that time and November moves for that time overall. The big thing in this portion, though, is a weekly pullback is very, very likely. Notice right here on the charts in front of you, in order to see something bad, you went up one time on the weekly, you curled down to the center line, you curled back up. You curl down, you curl back up. You curl down, you curl back up. And there's divergence all across this whole time. All across, from this high right here, all the way to this high right here, you had divergence the whole time. This is how many times it was violated. 1, rejection, 2, and then up here, and then we actually reject right there on the daily time frame. So this is just one push. This could be this moment right here. We could just be in this stage right now. And then we come down like this and we go up. We could come down like this and go up, go up, go up, go up. It could last all the way into 2027 if we want. That's how long they could leak this out. The main part here is this is most likely not a stock market crash. This is most likely something that is making you aware of weakness, aware of bad things, but it is not necessarily something that crashes you right now. The time where you are actually going to see the crash is just a few months before they start telling you you're in a recession. And right now, they're not even trying to tell you. They're trying to tell you you're not in one, but you're seeing the data prove otherwise. You are in a moment like this one over here. I believe it's September of 2021. Now, this moment was quicker. I think will be more extended out than this. But you see this big push higher. I think you are in a moment where you're going to pull back like this, like September of 2021. Now, September of 2021, to be very, very clear here, what was the reason in September of 2021 that we sold off? A number of interconnected concerns caused the SPY, which is the SP 500, to sell off in September of 2021, ending the month with a loss of 4.8%. These include uncertainty surrounding COVID-19 Delta variant, rising inflation concerns. Inflation was a huge concern in September of 2021. Why does that look like August? There it is, September of 2021. So this was where inflation was a big concern for the first real time. That was the real time where it was like inflation is a huge concern. Yeah, we just got rid of that. And look, just a few months later, what happened? Inflation was the biggest concern. So you're probably seeing, you're going to see a moment like that right now where a weekly pullback is the real reason we're going to crash. We're just not going to do it right now. We're going to let it leak out for another, year or two. Does the market have to start the weekly pullback now? We will be paying attention to those confirmations, but it is very important to trade like water. This means, hey, you could see a confirmation and it could look like, hey, this is the exact confirmation I see when things crash down. You have to have a plan for if it goes wrong. Why? Because the market is in a state right now, it's in a timeline where it can really move sideways. The market can move sideways or slightly up and still hold those reversal signals right now. Do you know why? Well, because we don't have the expiration for another week and a half. We don't have the September OPEX for another week or 2 weeks, I think, right? Going in, 2 weeks. And we don't have the quarterly OPEX until September 30th. So we could go where? Are we at a point where we are vulnerable right now is better? And do we have the signals for it? That's where we'll get into the shorter timeframes. But right now you do have the availability to be very, very vulnerable, even from the quarterly perspective. So I did give this level out in a YouTube video last week. I think it's great for you to get now. So please, if you want to mark it off on your charts, you can. I marked it off on the SPX. We're going to go over that in a moment. We're just going to look at it. 546.54. Where is the market right now? Or 646.54. That would have been bad. That would have been bad. We'd be way higher. 646.54. 646.54 is the quarterly expected move. You are right now at 647.24. You are outside of the 68% area before the end of the month. You have reversal signals on the 2-hour chart that we're going to talk about tomorrow. We're going to talk about how to see weakness on the 30-minute to potentially take a position for some kind of downturn. But the big point here is you are outside of the quarterly expected move going directly into the end of the quarter, which is September 30th. So you can move sideways. You can move slightly up and set traps at these times. You are moving slightly up and potentially setting a trap right now, and that's where we're going to get into the shorter time frames tomorrow. But I wanted you to have that point. If you're trading the SPX or futures or something like that, 64.92.69 is your quarterly expected move. And this is a great way to illustrate it. Notice everything's dandy, right? But towards the end, right, we're getting to mid-August. Oh, nope, can't get through. Oh, we're going to break through at the end of August. Nope, can't get through. Oh, we're going to break through in September. Oh, can't get through. So we could continue to do this for another like whole 2 weeks. We could just do this. And then we could see something bad as the end of the quarter comes up and we get that repositioning and we get the excuse for us downturning. So I wanted to point that out. I wanted to bring that to your attention. I just wanted you to have a couple of great levels to pay attention to. What are people really going to be talking about over the time? If we do see some kind of weekly pullback and it seems aggressive, but it's probably going to be like 6 to 10% corrective move. If it's more than that, then great. The thing that people will be talking about is recession, inflation coming back, cutting rates because of weakness in the job market. It will be some reason for recession, and the 10-year yield is showing that. And actually, if you look at the TLT, you'll really see it from the bond market perspective. You'll see the weekly divergences in this price action here telling you, hey, we are very likely to see TLT explode higher. Now, that could cause a crash. It really can. But from what we are seeing in the signals, it suggests to us that people might ignore that. We could see TLT build over time, and people, aka people in the stock market, might ignore that initially. So we might see a moment like September of 2021, where the reason we're coming down is real. The reason that we come down right now is real, the weakness in the job market. But we just hit a moment in time where we ignore that and we see the TLT and the SPY go up at the same time. There is a reason that TLT is extremely down at the lows and the SPY is at all-time highs. That is because people are really in the stock market and not in the bond market. Making money to the bull side has been relatively easy for years now if you just kind of close your eyes, throw a dart, and buy NVIDIA. But for now, you're going, oh, well, why is this about to change? I mean, look at this. From 2020 to now, it's just straight down. From 2020 to now, the other direction with the SPY is what? Pretty much straight up. Like, I know we had some pullbacks and things like that, but it's pretty much straight up. So that is about to change. And I just want to simply bring this illustration to your attention. If that changes and we keep this correlation, then we can see that TLT most likely will base out in here. Right? And during this period of time, all the way into 2026, maybe even longer, we can see TLT rise and the stock market that's way up here continue to rise, right? Maybe see a pullback and then continue to rise. And during this time, you're going to hit a point where TLT and the data probably takes over and this goes boom. And what's going to happen in the market? It's going to go boom, bust. And that's the truth of it. You are about to see the bond market change the game here, and that's the truth of it. And I think that it could happen right now, but from the signals we are seeing, it is most probable to be a time where we see a pullback for the real reason, and then people ignore it going into 2026, and we hit highs in 2026. So if you wanted my target for the SPY, I'm sure you're wondering, hey, where do you think we could get to after a weekly pullback? Let's go all the way into that. Let's really talk into it. And we'll remind you of this next weekend during the macro updates. I think that we could see a pullback into this area. And I think that we could leak this out into September 30th if we wanted to before we do so. But I think eventually you're going to see something like 600 tested, if not worse. I kind of hope it's worse. That'd be awesome. But that will just be a weekly pullback. And we will start to head to the upside. And where do I think by the end of the year we will get to if we see a booming squeeze here? I think that if we take care of this pretty diligently, pretty quickly, like by October, we can start to turn up and head to the upside, and we can go as high as about 680. 680 is my target for the SPY by the end of the year. So that is my overall target for the SPY by the end of the year. That's what I'm looking for. And as of right now, we're hitting the upward quarterly expected move. So I believe with these reversal signals, we are about to see a pretty good sizable pullback that could be considered a correction if it does reach about a 10% price point there. The best part about this is you watched a little bit longer. I know I'm rambling a bit. I know I'm talking a lot, but everything that I'm saying in this video, I have tried to film this multiple times now. I'm trying to get it across as simply as possible. There's like 50 pieces of info and I have 10 minutes to do it for you or 20 minutes to do it for you. I know that you're not going to watch a video that's an hour long. So I want to make sure to get you this information in a time that you can really digest it and understand it. Here's what I'm going to do now, since you watched this point of the video. The cues. The cues are a critical thing that can tell you a lot more than the SPY even right now. Why? The cues MACD is telling you that this is not going to be the crash moment now, but that on the weekly scale, we might need to remake these signals right here. These signals are what need to happen to go what? To go negative. Look, these signals happen, we go negative. These signals happen again, we go negative. But we just went positive. This is that first move is what the cues are saying. So do not expect this market to stop is what I'm overall getting at. We can see a mean pullback. We can see the cues go all the way down to 517. We can see them go fill this gap down here at 486. And I still would be saying what? This thing's probably going to curl up into positive territory. It probably is. That is the most probable thing to happen with this type of signal. And I don't think we're getting down there. I really think that we'll probably get to like 515 at the worst of it, but we'll see. That being said, the cues, why is this so good? Because you can seriously illustrate, hey, there's your divergences that cause you to go negative. Do you have any of that right now? No, and that tells you a ton. It tells you every single time you get a daily pullback, look at the weekly chart. Do you have those divergences? No. If you get a daily pullback or a weekly pullback, it means it's an opportunity. That's the point of this portion of the video, to tell you what can I do with this information. You need to understand that this is most likely to be a weekly pullback. So if I do my job on the daily time frame, I can find a good place to buy stocks. I can find a good place to buy the SPY and ride that wave for a little bit. If I see a weekly pullback and I see a weekly confirmation, I know that the market's most likely going up for the next few weeks, maybe even months, because it's a weekly chart. This is where it can really help you, and the cues are very good at illustrating this. You can see all the divergences on the RSI. Do we see any of that right now? No, you don't. Could this just keep going right now? Yes, it can. That's why we're going to watch that daily time frame very seriously. What are we going to look for on the daily time frame for the weekly to turn around? Well, we're going to look for divergence, right? We're going to look for divergence or a higher low. Exactly what we did here when we called that bottom with the 2-hour higher low, the scenario number 1. So what are we overall looking for here? Well, we're going to see if the market's able to make those reversal signals. So make sure, ow, I just slapped my computer. Make sure you're able to, or make sure you're subscribed for tomorrow so you're able to catch our video with the shorter time frames, because you have the signals right now. I'm glad people are excited about it and emailing me about it. You are by the center line, right? So you need to squeeze to violate these things. But what do we need to see in order for, and let's talk into the future a bit. Let's just suggest that, hey, by say mid-October, we're down at these type of levels. What do we need to see down here? Well, you're very likely to see this type of look on the daily chart, and you are very likely to see what? A divergence on the daily chart. That divergence will be your best friend. That divergence will tell you the exact confirmations that you need in order to say, hey, there's divergence here on the daily, the weekly is in positive territory, and the weekly is very likely to curl up. This is the best thing that you can understand about markets, is higher lows and divergences on daily timeframes. It will give you the easiest sense of direction. And if you utilize that with monthly expected moves and weekly expected moves, which you can get on Patreon right now for $7 for all the stocks that we cover, but we give them here for free on the SPY and the Q. So make sure to like and subscribe. This is what will tell you which direction the market is very likely going for the next couple of months. Then you can trade accordingly. The last thing I wanted to talk about was the VIX. Okay, this is the last bit, and then you guys can finally go have a great day and not have to deal with me. Here, I'll take a sip of coffee before we get. All right, let's finish this thing up. So the daily time frame has VIX. VIX has those daily signals just like the SPY does. Has VIX violated these signals? No. So is all of the risk still there? Yes. All of the risk is still very much so there. All of it. All of the risk is still there. You have all the divergences still there. Everything is still there. Nothing has changed. We just saw that 2-hour move up that we were aware of. Now we're looking for reversal signals on the shorter time frames, and we'll talk about those tomorrow. The daily signals here, you have extreme daily divergence on your MACD. You have extreme daily divergence even in the near price action for the RSI. Could we go make another divergence point? Yes. We just illustrated at the beginning of this video how many times we can violate things, but we hold the signals, right? That happens a lot during these type of squeezes, during these bull runs, before you see something a little bit bad. What is very likely here? It is very likely that this is going to end up going positive, which means all these divergences are going to do what? They are going to turn up the weekly time frame. Now, there is something before we get into this weekly turn up. There is something very critical here. If you are going to see really extreme volatility come in, right? Extreme volatility come in, and you're going to like remain above 20 for some time. Extreme volatility come in for a flash moment. What usually happens before that? You test 12.12. You get down to 12.12. 12.12 is a place that I mark off that you can mark off on your charts too. I believe other traders just pay attention to 12, but I use 12.12. It's just something with my anecdotal data that I've marked off. It's a great level. I have a few other ones on here too in white. This level tells you that the market is like ultra bullish. Everyone has calls. Volatility is not going to pop up. We're just going slow, dragging to the upside over and over and over again. And everyone trying to call a stock market crash will say it a million times. But now we have the bigger time frame. We know that we don't have to talk too much about that for a long time. High probability of that. Well, notice here, we have to get down to that 12.12 and make what? Reversal signals. So it is very likely that we have a lot of time here to make to leak higher and leak higher until we actually see a crash, which is why we are more paying attention to 2026 for that. I want to talk about that. So what is very likely to happen here, knowing that 12.12 has not been tagged yet? Well, it is very likely that we need to see a move from volatility, a big one. I think a big one can come. I think an overreaction from volatility could come. An overreaction from volatility does not mean the SPY has to crash by 50%. You can see volatility go all the way up to here on a 4% pullback for the SPY. Why is that? Because people can start to really think that a crash is happening, and then it does what? It just subsides. Now, what do I think is happening here, and what is the important thing to pay attention to? You know, we can talk about these type of things. The important thing is, I think we'll go up to somewhere around 36.11, and then I think we'll subside. I think that this MACD will be able to curl up, and it will curl directly back down. It will actually make that low point where we start to create those divergences before we actually see a crash, maybe going into later stages of 2026. Why is that? Because I think that we need to curl up. People need to see that September 2021 type of moment and think, oh my gosh, we're crashing because of recession, or we're crashing because of inflation back then. We're crashing because of recession, then the job data is super weak. And then they start to ignore that data with rate cuts. And then we come down to lower levels. And then we actually hit 12.12, and we make a reversal signal at 12.12. And that's actually when the big volatility comes in. Now, this is really looking out into the future. So this could totally be incorrect, but this is what would really likely happen. Now, that being said, what are we paying attention to right now? What's the most likely thing? What is the good thing to pay attention to right now? This moment, right? You're just right here. You're potentially right here. And we could still go down and make that little divergence point before we do it. We can leak this out into September 30th, but I want you to understand what is the most probable with volatility right now. The most probable thing for volatility as it holds its daily signals and is still confirmed on the daily time frame is we are going to see a weekly bounce from volatility that will most likely be a little bit vigorous, and people will be very, very, very over-exaggeratedly fearful of. And the market most likely will only come down about 7-9%, somewhere in there. And we're going to turn up on the weekly scale and go higher. That's the most probable thing here. So the most probable thing for volatility is the weekly is going to turn up, and then the weekly is going to turn down and probably get to 12.12. And I would really like everyone to be a part of that squeeze. Just to flash over, IWM has the most unique look. It's still holding the signals on the daily, saying we can get some kind of reversal. We'll maybe go into the shorter time frames for this as well as it holds divergence. You can just see those right away. The DIA also has great divergences here. So the DIA is suggesting the same thing. So just wanted to point these out at the end of the video as we get into our main takeaway to drive home the point here. To drive home the point here of we have not violated any of these signals on the SPY. We have not violated them in the opposite direction for volatility. We have not violated them for the Qs. We have not violated them for the DIA. We have not violated them for the IWM. So what is the most probable thing to happen here until we violate those signals? The most probable thing to happen here going into the end of September, this can move sideways into September 30th if it wants to. But as of right now, the most probable thing is we are going to see a weekly pullback unless we are able to violate those with some kind of squeeze. That is the truth of it. It is very likely we are going to see a pullback, mainly just a slight retracement, probably down to the weekly 50 is what I assume over the next couple of months. And that is still the most probable thing. Okay, so trading like water while we build up maybe or go sideways into the quarterly OPEX is a definite thing to be aware of. That's why we say trade like water. But really, if you're going to take a trade in any fashion, you should have a plan for that trade. You should have the confirmations and the reasons for that trade, and you should have a plan for if it goes wrong. That way you're saying, hey, I'll take a 10% loss, but I am not giving all of my money back to these market makers who are trying to trick us as we go into a quarterly OPEX, because they do funky things around these times, guys. So I just wanted to say thank you so much for watching this video. I hope that something in this video was able to clarify some of your thinking, maybe clarify something that you've been thinking about as a trader. Maybe you're thinking, wow, this market's been really irrational. Is it really violating everything? Can it not turn down? No, it is still holding those signals, but I just hope you are able to take something helpful away from it. If you're new here, please subscribe so that you can stick around. Even if you didn't understand something from this video right now, you might be able to understand it just after a couple of days of watching in these videos. So I really appreciate you guys clicking on this, sharing with a friend, liking, subscribing, doing all that stuff. I'm going to talk to the wife, and we've already set aside some extra time here. So hopefully I can continue to give more extensive YouTube videos so that we can understand and try to figure out exactly which way this market is going to put us in the best situation to make money, because our goal here is to make money in any market. And we do that by trading like water. All right, guys, have a great weekend. I'll see you guys tomorrow for the shorter time frames, and peace out. Later, homies.